You've probably felt this too. Something's breaking in Ontario's cottage country, and it's not just a slow season. Homes are being slashed by hundreds of thousands. Terminations are spiking, listings are sitting, and the number one question we keep getting is where's the actual data? So today, I've got it. The full June breakdown across Muskoka, Kawartha Lakes, Haliburton, and Parry Sound. Not just the averages, but the real numbers sellers don't want you to see. Because behind the headlines, the correction is already here. And that cottage you thought was your safe haven or your investment hedge. So yeah, it might already be underwater. Muskoka is definitely in a correction mode. Haliburton just saw 13% price crash in 1 month. Parry Sound is a free-for-all. Prices down 14.4% in June. This isn't just about vacation homes anymore. It's about what happens when a high interest rate hangover collides with summer selling season and the buyers are not showing up. Hey, I'm Claudia. I'm one of the Ragona sisters, and if you've been watching this channel, you know we don't sugarcoat what's really happening in the Canadian real estate market. All right, in this video, we're diving into exact numbers, real listings, and what no one's telling Canadians about the cottage crash unfolding right now. We'll break it down, why the market's unraveling fast, which regions are taking the biggest hits, and what it means for your next move as a buyer, investor, or seller watching values drop. Let's break it down. So, Muskoka's numbers are in. The market is officially in correction mode. The median sale price fell 7% in just 1 month, landing at $785,000. Compare that to last year, that's nearly a 12% drop. So if you bought in 2024 thinking it was the bottom, you might already be in the red. Sellers are adjusting fast. Median list price dropped 8.2% month over month. People aren't just negotiating down, they're coming to the market already slashing expectations. And at 78.8% of homes are now selling under asking price, the highest this year. This isn't a seller's market. Buyers have leverage and they're using it. New listings dropped 20% in June. And not because everyone sold, it's fear. Sellers are holding back, waiting for conditions to improve, or unsure what the market will give them. Terminations jumped 50.8% in 1 month. But don't assume they gave up. Many are cancel and relist properties. This is a classic sign of listing fatigue and growing desperation. And the total dollar volume, that's down 16.5% from May and nearly 15% from last June, right in its peak season. Volume should spike in summer, not stall, and listings are sitting longer. Median days on market jumped 26%, now at 24 days. That may not sound long, but in a seasonal market like Muskoka, time kills deals and confidence. So what's really going on? This is the interest rate fallout finally hitting cottage country in full force. Buyers are hesitant, sellers are shaky. Even seasoned investors are starting to doubt the math. This used to be sold as an inflation hedge, a place to park cash and ride long-term appreciation. But when you're down 12% year over year and nearly 80% of homes are selling under asking, that narrative's cracking. Even the list to sale ratio slipped. The median sale price to list price is now at 97.1%. It barely changed, but the softening is here. And while transaction volume ticked up 3.1% from May, it's still down nearly 10% from last year. Buyers are still out there, but they're cautious, picky, and patient. Now let's move to Kawartha because the June numbers just dropped, and while the surface looks calm, the undercurrents are moving fast. Median sale price dipped 33.6% from May to $679,500. It's still up 1.4% year over year, but don't let that fool you. The market is shifting. List prices are falling too, down 3.8% month over month, and nearly 6% lower than last June. Sellers are adjusting expectations in real time. Total dollar value is down 8.5% since May and 22.5% lower year to date. The demand isn't dead, it's nervous. And yes, transactions rose 7.5% since May, but we're still down 21% on the year. That rebound is soft, not strong. Terminations surged 59% in June. That's cancel and relist strategy in full effect. Days on market rose to 22 days, up 7.5%. That's an extra week, and it matters. Buyer behavior is shifting too. 78% sold under asking and only 6% at list price and just 16% over asking. That's down from 20% last month. Now here's a twist most buyers haven't even factored in. Kawartha Lakes launched a full short-term rental licensing program in January. So every short-term rental must now be licensed and follow strict rules. Great for locals tired of the weekend chaos. But for investors counting on Airbnb cash flow, that's friction and that's risk. And it can kill deals in a tight market. Here is, Kawartha's not crashing, but it's cooling with new regulations layered on top. And that shakes investor confidence fast. All right, Haliburton, the June numbers are in, and this one's a roller coaster. Median price dropped 13.1% in 1 month, down to $665,000. Most of that drop happened in 30 days. List prices fell 4%, but still up slightly from last year. Sellers are correcting, but not fast enough. Sales volume spiked 80% month over month. Why? Buyers are bargain hunting. 82.7% sold under asking, the highest of any cottage region. Buyers are tossing offers and walking if they don't get the deal. Days on the market rose 31% to 21 days, and sellers are losing leverage. Terminations, those are up 16% from May and 230% higher than last June. That's cancel and relist full tilt. Dollar value rose 61% from the extra deals, but we're still down almost 30% year to date. This isn't recovery, it's a reaction. Now to Parry Sound, and this one's a wild one. Median price crashed 14.4% to $565,000, the steepest month drop of all. List prices only dipped 1.4%, meaning sellers are still clinging to old expectations. Transactions rose 12.3%, but we're still down nearly 11% year over year. New listings fell 14.3%. Sellers are stepping back. Terminations, they're up 31.8% since May and more than double since last year. That's proof pricing is failing and the market's rewriting itself. 80.5% of homes sold under asking. Bidding wars are dead. The days on the market jumped to 26. And that's in summer-driven market. That's deadly for what's supposed to be a busy market. Total volume fell 19.8% since May and 33% since June of last year. That's 27 million gone in 1 month. So here's what no one's telling Canadians. Averages don't tell the truth. Real listings do. Those 842 average prices, they're blending 3 million lakefronts with $499,000 bungalows. But the truth is in the cuts. Take, for example, the Cottage in Muskoka. It was listed various times with countless price reductions. This home was on the market for almost 2 years. Initially was listed at $2.4 million and had just recently sold for $1.3 million. That's a $1.1 million haircut. This next listing in Huntsville, initially listed at $2.2 million, and it is now reduced to just under $2 million. The home is still unsold at the new price for just at over 60 days. So as you can see, this isn't just a cooling market. This is a structural pressure. So what do you take from all this? This isn't just a cooling trend. It's a structural pressure building in real time. Rates are still high and short-term rules are tightening and buyer psychology has flipped. The spring surge didn't come. Inventory stacking and serious price pain is leaking through the averages. If you're a buyer, you've got leverage, but use it wisely. And if you're a seller, the longer you wait, the harder it may hit. If this helped you see through the chaos, hit like, subscribe, and tell me, are you seeing price drops in your area? Would you buy in a cottage country right now or wait it out? Let's talk in the comments. Thanks for watching.